Good morning, everyone, and welcome to today's virtual training on IR35. We are delighted to have so many of you join us today. Without further ado, I'll hand over to James Austen, one of our presenters today.
Thanks, Alice. Good morning, everyone. Thank you for joining us for this webinar on IR35 and off-payroll working, which I've no doubt will be very relevant to a number of you at the moment. Technically, of course, IR35 and off-payroll working refer to slightly different areas of the tax code, but in common with usual practice, we'll use both interchangeably here. In my case, I hope you will forgive a case of lockdown hair and the somewhat less than professional background which you see me in. We had hoped to be able to give this talk to you last year in our offices. Sadly, that wasn't possible, and we are where we are this year. So to introduce ourselves, my name is James Austen. I'm a partner in the tax and estate planning team at Collyer Bristow, and I specialise in advising business owners and entrepreneurs. In addition to which, I head up the tax disputes practice at Collyer Bristow. Speaking with me today is Sinead Kelly, who is an associate in our employment team, with whom I work closely on these matters. Sinead advises employers and employees on all aspects of HR, employment and consultancy arrangements. So Alice, next slide, please. So today we're going to give you a fairly whistle-stop tour, and by which I mean we'll be talking for about 40 or 45 minutes, I think, hopefully leaving time for questions at the end. We're going to describe what IR35 and off-payroll working are. We're going to look at the forthcoming changes to take effect on the 6th of April 2021. We're going to go through very briefly some recent cases and commentary on them, and we're going to look in practice about what this means for you as contractors or end users and what you can and should be doing now. If you wish, there will be time to raise questions at the end, and you should have a Q&A box on your screen in which you can type questions as they occur to you, and Sinead and I will pick up any questions at the end. So, Sinead, over to you.
Thank you, James. So, pretty sure that everyone here has at least heard of IR35, but the name doesn't really explain what it is. So, just to put it quite simply, IR35 is a set of tax rules which are used to identify whether an individual contractor providing services to a client via an intermediary is genuinely self-employed, or whether they would in reality be an employee of the client if they contracted directly with the client. Usually the intermediary is a personal service company, and that's generally a limited company which is owned by the individual contractor, and they're generally the sole employee. In reality, many contractors often work for the client in the same way that employees work for the client, but contractors bill their services through their personal service company, and that just makes their earnings as tax efficient as possible for them. If the contractor is genuinely self-employed, then they fall outside of the scope of IR35. However, if a working relationship is considered to fall within the scope of IR35, then the individual who's providing the services is classed as an employee for tax purposes and therefore should be taxed accordingly. So essentially, IR35 is an attack from HMRC on what it considers to be tax avoidance by disguised employees operating through personal service companies. So you'll see on the slide there, done a basic visual representation. So we've got a contractor there, we'll call her Sam. She provides services through her own personal service company, Sam PSC Limited. And the personal service company contracts with the client, which is the business, so most of you guys, and there's usually a written agreement, a consultancy agreement, contractor agreement between the limited personal service company and the end user. And that contract generally sets out the fee that's payable. However, if the relationship falls within the scope of IR35, then notwithstanding that the contract is between the personal service company and the end user, a hypothetical contract is created between the individual contractor and the end client, and that effectively bypasses the personal service company. So the effect of being in scope for IR35 is that the individual should be taxed as though they're an employee. And the intention behind this legislation was to put an end to any tax advantage of working effectively as an employee, but doing so through a personal service company. The second example that you'll see there has an agency inserted in the middle, and you'll see underneath that they are the fee payer, whereas in the first example, it's the client who's the fee payer. So in some cases, the client might not contract directly with the personal service company, and instead the arrangement could go through another party, usually an agency, and it's that agency that's responsible for paying the personal service company. However, the same test applies with regard to the individual who ultimately is working for the end user, and if the relationship falls within the scope of IR35, then the individual should be taxed as though they're an employee. Alice, could I have the next slide, please? Thank you. So before we take a look at the changes which are coming into force from the 6th of April this year, one common misconception about IR35 is that these are new tax rules that are just coming in this year. And in fact, that's not the case. IR35 rules have actually been around for over 20 years already. And when IR35 first came into force, it was the contractors who were responsible for assessing their own status, employment status based on the working relationship. And if they believed that they were in scope for IR35, then it was the individual's own personal service company who was responsible for accounting for any income tax and national insurance contributions which were due. Now, unsurprisingly, most contractors didn't find themselves to be in scope for the additional tax liability. And in reality, I would assume that a lot of contractors probably weren't even aware of the requirement to undertake an assessment in the first place. It was estimated by the government that only 1 in 10 contractors who should have been paying tax on part of their income because they were in scope for IR35 actually did so. So clearly leaving the decision making to the individual contractors wasn't particularly beneficial to HMRC. And in 2017, the IR35 rules were changed for the public sector. And that meant that responsibility for determining whether IR35 applied moved away from the contractor and their personal service company and passed directly onto the end client, who in the public sector, generally public authorities. As a result, over the past few years, there's been a number of cases where the assessment of a contractor's employment status for IR35 purposes has been challenged, and you may have heard of some of those cases, including the BBC cases. My colleague James will discuss those briefly later in this presentation. So the changes from the 6th of April this year mean that the responsibility for determining whether IR35 applies will also change in the private sector for medium and large businesses. So those businesses who engage the services of a contractor will now be responsible themselves for assessing whether each assignment is within the scope of IR35. If the working relationship is considered to fall within the scope of IR35, then income tax and national insurance contributions must be deducted and paid. So although the responsibility for determining the status of the working relationship will become the responsibility of the end client, so you guys, it's actually the fee payer who is responsible for ensuring that the correct tax is deducted and paid. So if there's an agency and the agency is the one that's the fee payer, then they're the ones that have that responsibility. But if, as the client, you're the one that's responsible for the fee, then that responsibility also falls on you. So the changes apply to all contracts which start on or after the 6th of April this year. or in relation to existing contracts where payments will continue to be made on or after that date. Alice, could I have the next slide, please? Thank you. So as mentioned a moment ago, the changes that will apply to the private sector from 6th of April this year will only be relevant to medium or large businesses. A medium or large size company is one which meets at least 2 of the following 3 criteria which we've listed on the slide there. So firstly, an annual turnover of 10.2 million or more. Secondly, a balance sheet total value of 5.1 million or more. Or the final criteria there is having 50 or more employees, and that's averaged over a year. So small businesses won't be affected by the changes from April 2021 if they don't fall within the scope of a medium or large business. So for those small businesses, it remains the intermediary's responsibility for determining whether the working relationship is within the scope of IR35, and the small business, the end client in that case, doesn't have that responsibility. They just continue to operate as they have been doing. Alice, could I have the next slide, please? Thank you. Here's another diagram just to recap and to give hopefully a clearer oversight of the actual change of responsibility that will be occurring from April this year in the private sector. So at the top of the slide, you'll see we've set out the current position. And that is that in the private sector, all contractors should be self-assessing their IR35 status via their personal service company. If IR35 applies, then it's up to the personal service company to ensure that they deduct and pay the relevant tax and national insurance contributions which may be due. The change from April this year, which you'll see on the lower part of that slide, is that for contracts that start on or after the 6th of April, or as I said, existing contracts that are in place, but where payments are made on or after the 6th of April, it now becomes the client or the end user's responsibility to determine the IR35 status. So if IR35 applies and the business, the end user, determines that that does apply, if they're also the fee payer, then they will be responsible for deducting tax and national insurance contributions, and also for paying employer national insurance contributions. But if the fee payer is another party, so initially we looked at the possibility of an agency being involved in that work supply chain, then it's the agency that's liable for ensuring that the correct tax is paid or deducted. Alice, could I have the next slide, please? Thank you. So there's a number of factors which determine whether someone is a contractor or an employee. And for a lot of businesses, obviously from the 6th of April, this is a huge responsibility that you now have to look at those factors and make a determination as to whether or not someone is genuinely self-employed, genuinely a contractor, and therefore outside of the scope of IR35, or whether in reality they might actually be considered an employee for tax purposes. As you can see from the slide that we've got up there, there isn't one clear test to determine employment status. We often get asked to draft consultancy agreements with a request that they won't fall within the scope of IR35, but unfortunately it's just not as clear cut as that. HMRC take a look at a number of factors and they decide on balance whether an individual is genuinely self-employed or whether for tax purposes they should be deemed to be an employee, and that's based on the reality of the actual working relationship. So although the contract is relevant, the factors look beyond what's there in black and white and look at what actually happens in practice. So the main factors that we know HMRC look out for include firstly mutuality of obligation. So that exists where a client is obliged to offer work to an individual under the terms of a contract, and the individual is obliged to take it, that's generally seen as an indication of someone being an employee, because there's a mutual obligation to work together, as you'd expect to see under a contract of employment. So, for example, with employees, you're obliged to pay them for a set number of hours that they work, and even if it's not busy, they're still obliged to turn up each day and carry out the tasks that are needed. Whereas with a contractor, you'd expect there to be a bit more flexibility. They wouldn't necessarily be required to work. There's no obligation on you to offer the work, and there's no obligation on them to accept it either. The second factor that we've listed here is control, and this is another quite important factor to consider. So how much control as an end user do you have over the individuals that you contract with? So do you dictate to them when, how and where they provide the services, or do they have freedom and flexibility to choose their own working hours, their own schedule, and the location from which they provide the services? Obviously, the former there, the more control that you have is likely to point towards being in scope for IR35, and the more freedom and flexibility that the contractor has, the more likely they are to be considered genuinely independent contractors, and therefore outside of the scope of IR35. The third factor that we've listed here is substitution, and this is sometimes also considered to be personal service. So for employees, if you've got an employment contract, you're contracting with that particular employee to work for the company. With contractor arrangements, if you require that individual to personally provide the services, then again, it's possible that the arrangement could be within the scope of IR35 and they could be treated as an employee. So, for example, if you're looking at someone that's looking to engage someone who's got particular expertise in a certain area, for example, IT services, you might need their specific expertise if it's very nuanced. However, a contractor sometimes has the right to provide a substitute, provided that they've got the relevant qualifications. So again, if it's general IT support, for example, could they provide a substitute to provide that same service on their behalf, or do you need the actual person that you've contracted with to provide their services personally?
I just want to chip in at this point, Sinead, and talk about what we see in practice here. And substitution is one of the important areas for a lot of clients. End users of contractual services usually have a very clear idea as to what they want as regards their sort of employment or contractual relationship with those who work with them. And really, when we're talking in this context, we mean they want them to be treated as self-employed contractors. What we typically find is that end users also tend to have very strongly held views as to the nature of the services to be provided under the contract. And in my experience, the right for a contractor to provide a suitably qualified alternative is a real sticking point for a lot of businesses. So there is some tension here between the tax status and the desired contractual relationship. And as Sinead has already mentioned, unfortunately, because of the complexity of these rules and the number of factors that are relevant to them in practice, it's very difficult to have a bright line test. I've never seen a case in practice where I've been able to say every single one of these factors without exception falls on one side of the line or the other. There is, I'm afraid, always a mix of factors to weigh up. And it may well be for end users thinking about services that they want to contract out, there will be some trade-offs about which they might need some careful advice as to the respective weight to put on these aspects, particularly mutuality, control and substitution. If it's particularly important for you that your contractor must provide the work personally and can't substitute another, well, then you may need to be more flexible, for example, on control, on exclusivity, and make sure that there aren't other sort of countervailing pressures which might tip that relationship onto the side of an employment one. That's all I wanted to say on that point.
Thank you, James. So I think those top 3 factors that we've listed there, as James mentioned, those are really the key ones. Those are the main ones to consider. But that's not an exhaustive list, and so we've listed a couple of other factors which would also be taken into account. So on the list there, we've looked at exclusivity, integration, and equipment. So if someone is a genuine contractor, you might expect that rather than just working exclusively for the one end user client, they're likely to provide services to other businesses as well, or at least have the option to do so. Additionally, they should probably be quite clearly set up as their own business and, for example, probably have their own business insurance. And finally, they're likely to provide their own tools and materials. Looking at those same 3 factors and whether someone might fall within the scope of IR35, if you have a contractor that works exclusively for you, and particularly if they're prevented from working anywhere else, that's more likely to point towards them being an employee for tax purposes. Also, and quite crucially, how does the arrangement look to others? Are they very integrated within the business? So do they have an email address, business cards? Do they appear on the company's organisation charts? Are they required to wear a uniform? All those sorts of things would certainly give the impression that they probably are working in the same way that you would expect an employee to work, so likely to be in scope for IR35. And again, if they use equipment and materials which are provided by the client, then again, that could be another indicator that points towards the relationship falling within the scope of IR35. So as we've mentioned, no one factor will determine the status, and it's a case of considering the overall picture in every single assignment. Alice, could I have the next slide, please? Perhaps a slight technical issue there. Well, I'll start talking about it anyway, because it's something that I've already mentioned. So as I explained earlier, from the 6th of April, there's a requirement for businesses who engage contractors to provide a status determination statement for every engagement. And we now have the slide there too. It's really important that this step is taken, because until that status determination statement has been provided, the end client, so you, the businesses who are contracting the consultants or contractors, remain responsible for any income tax or national insurance contributions which may be due. So the status determination statement has to be in writing. It's not a case of simply saying, yes, they are in scope for IR35, or no, they're not in scope. You have to give reasons for that decision. And so every engagement has to be considered separately on its own facts with reference to the various factors that we've just looked at. And you should keep a clear record detailing how the decisions were made. James, I know that we've mentioned here about looking at these status determination statements and using reasonable care, and I was just wondering if you had a comment on the use of reasonable care.
I do. I mean, it's a pretty well understood concept in tax terms. So, for example, everyone who's just done their tax return will have been required to take reasonable care when preparing that. The important point is that if HMRC subsequently decides that an end user hasn't taken reasonable care in preparing the status determination, then that fatally undermines the effect of that status determination. And if the status determination was that the relevant person was a contractor, or to be taxed as a contractor, not an employee, but reasonable care wasn't taken, then the result will be that the taxing obligations will fall back on the end user. That's the default position. The end user is responsible for tax and national insurance unless and until a valid status determination is made to the contrary. And to be valid, that status determination has to be prepared with reasonable care. And Sinead will talk in a little bit, I think, about what reasonable care looks like in practice. But it's really important, I think, that that attention is paid to that. It's not simply a tick box exercise where you can just say, yes, it looks fine to me. It seems to me that they're a contractor, job done. It's not that straightforward, sadly. Wish that it were.
Thank you, James. So exactly right. You know, it does have to be applied with reasonable care, looking at all of the factors and looking at every engagement on its own facts. And I think another important point to mention here is that you're looking at and you're making an assessment on the actual engagement, not the contractor. So you're looking at the working relationship under that particular assignment or engagement. And once you've reached a decision and produce a status determination statement, that has to be given to the contractor. And if there's also an agency involved in that supply chain, then they should receive a copy too. And the contractor's then got a right to challenge the decision. So if, for example, you think they fall outside of the scope and they think they fall within the scope of IR35, they have the right to challenge the decision that you've made. If they do challenge that, you then have 45 days to respond to their challenge. And your options are either to uphold the previous decision, and as we say, hopefully you've got clear records explaining how you've reached that decision, or alternatively, based on the challenge, you might actually come to a different determination. And you should certainly consider any representations that the contractor makes so that you're confident that you make the right decision. Obviously, producing these status determination statements is quite an onerous task on businesses, particularly for those who engage services of numerous contractors. And HMRC has in fact produced an online tool called Check Employment Status for Tax, or CEST as it's sometimes referred to. And that's been developed and upgraded over the past few years, and I think most recently in December last year. That tool asks a series of multiple choice questions about the working relationship to help you determine whether it falls in or out of the scope of IR35. So there's 3 possible outcomes that you can get once you input your answers into the tool, and those are that the relationship is one of genuine self-employment. Alternatively, it might say that the individual contractor should be taxed as an employee. Or thirdly, and not particularly helpfully, the tool is sometimes unable to determine the status, and so you're left with a bit of an unknown, unfortunately. The CEST tool isn't perfect. If you've looked into it already, you may be aware that there's several criticisms of it. As I say, it is something that HMRC have been trying to develop and upgrade, but even at the moment, one of the issues is that it automatically assumes mutuality of obligation applies in every case, and obviously that's not necessarily the case at all. Having used it many times ourselves, we can see that even if you make what we consider to be a relatively small change in just one of those questions on the multiple choice process, that can affect the entire outcome. And you know, it's quite difficult, I think, for businesses to sometimes make a determination as to what the exact answer should be. You know, ourselves as lawyers can say that there are certainly a number of grey areas or borderline cases, and ultimately, particularly in those sorts of instances, it's possible that the tool could give you a determination which says that they're just not able to confirm one way or the other. So whilst the CESS tool is generally quite a helpful and indicative tool, it's only really as useful as the data that you enter into it, and useful insofar as it can give you a determination one way or the other. So you may find that it's not actually a great substitution for carrying out a full independent assessment, but something
I think that's right.
to
Jumping
consider.
in there, Sinead. I mean, I think the CESS tool comes from the right place in HMRC. I think it comes from a place of genuinely wanting to assist people. But as Sinead says, a tool of that kind is only as useful as the accuracy of the data put into it. And I would add to that, only as useful as the algorithms then processing that data. And whilst I think it comes from a place of wanting to help people, I think it's also the case that the algorithms being used by HMRC are those favourable to HMRC and not necessarily to the user of the tool. So the way we tend to use it is as a ready reckoner, is as a double check of our own analysis for clients. But as Sinead mentioned, actually a lot of it's a multiple choice question in various stages, and actually the questions are very difficult to navigate. The answers to them are extremely technical, and you may, as Sinead mentioned, put in small differences in some of those boxes and come out with an entirely different decision at the end. So that's something to bear in mind. I wouldn't say don't use it. In fact, I would strongly recommend that you do, and that you keep a copy of the determination at the end. And in fact, at the beginning, you're able to put in a reference number, a reference for each time you use it. And if you put in a sensible reference that you can cross-refer to your own employment or contractual records, to keep hold of that test, show that you've done it. Again, it all goes to show that you've taken reasonable care in preparing the determination, but use it with care, because we certainly don't think that it is foolproof, far from it. Should I take over here, Sinead, and talk about the penalty regime?
Yeah.
Alice, the next slide, please. I just wanted to bring you up to date on some recent statements by HMRC about how they're going to operate these new rules from the 6th of April. And what I think we can infer from HMRC's statements about this is that there's some concern that this is a bad news story for HMRC. They know that this comes in the face of an awful lot of criticism from those affected. It's factually enormously complicated for end users and contractors to navigate, and that makes it extraordinarily and understandably unpopular. And so it's in that context, I think, that HMRC has been saying, well, look, for the first tax year, at least, we're going to be operating what we call a light touch compliance regime. So HMRC say they're going to be very wary about enforcement and penalties, at least initially. And as regards 2021-22 tax year, they say, well, they just won't issue penalties at all for breaches of IR35 off payroll working, unless those breaches were constituted deliberate non-compliance, which all sounds very helpful. One slight word of caution. The word deliberate, again, is well understood in a tax context. And what I would say is that HMRC often has a different, a much more wide-ranging view of what constitutes deliberate non-compliance than most advisors would. Certainly, I see cases in practice where HMRC alleges deliberateness, where we say there is either innocent error or, at worst, carelessness in preparing the return. And deliberateness is often a default position for HMRC unless you can show that it wasn't deliberate error, which is actually the reverse of the actual test. So perhaps HMRC is not being quite so friendly and touchy-feely as they might like to make out, but we shall see. Even more importantly, I think, HMRC thinks, because I think, well, it takes a rather pessimistic view of the tax gap, in that it thinks that there is lots of untaxed money out there. And it thinks, we're told, that 1 in 10 private sector contractors has been operating this correctly in the existing regime. That's HMRC's view. Now, personally, I'm very sceptical about that percentage. If HMRC is right, the consequence will be that there will be a 90% increase in the tax take under this new code, from which we will infer that an awful lot of contractors will have to change their tax filing position to say that they should be treated as employed for tax purposes and not self-employed. What HMRC has said about that is that it won't use filings from next tax year onwards. It won't use the information there where there's been a change of tax status to employed to open inquiries into previous year's returns, impliedly that returned on the basis that someone was self-employed, unless HMRC suspects fraud or other criminal behaviour. And that, again, should be a useful safeguard, because my view is, this may be naive, but certainly I haven't seen in practice a wide-ranging desire to flout or avoid the IR35 rules. And I think it would be wrong of HMRC to use the data it's going to get now to look back into previous year's returns. They say they won't do so, and let's hope we can hold them to that. So moving on, Alice, next slide, please. Let's step back a bit and have a look at some of the recent cases. I'm not going to go through these exhaustively, although lawyers get excited about these things, most normal people don't. But I do just want to draw out some themes. What can we tell from these cases generally? Well, the first thing that we can see, just looking at the page as a whole, is that cases fall on both sides of the line. And given what Sinead and I have said about how nuanced these tests are, that shouldn't be a surprise to us. But it is something that commentators have pointed to and say, well, how can anyone be expected to work out what the actual position is in any given case? Because look at these contradictory decisions we get at first instance and on appeal. Less so now, we're getting more appeals. Essentially, the criticism is it's so uncertain, even the judges can't decide between themselves. So how is a normal person in business supposed to? And I'll look at that criticism in a sec. first, just drawing out some points from these key cases. The Lorraine Kelly case, Albertel. The tribunal held that Lorraine Kelly was being used as a brand and a personality, that the contract was with Lorraine Kelly, the brand, rather than Lorraine Kelly, the flesh and blood human being. And as a result, she was a contractor, or rather Albertel Limited was a contractor. What can we gather from that? I think we can gather that if you're Lorraine Kelly, you're more likely than not to be a contractor than an employee if you purport to contract as such. But there is only one Lorraine Kelly. My own instinct is that I don't think that the judgment in that case is going to lead to a wide run of cases following it, simply because in practice most contractors are unlikely to have the profile and brand recognition that she had that tipped that case. So looking at another media case, Athol House, which was the Kay Adams appeal, the tribunal looked at her past work history, which was extensive and varied. It looked at her right to undertake third-party engagements without the consent of the BBC. And it wasn't just an empty contractual right in Kay Adams's case. She actually did carry out other contractual arrangements without the BBC's consent. And these were such as to make her clearly on the contractor side of the line. Looking at the next case down, George Mantides, this in one case encapsulates what Sinead and I have been saying about how complex and nuanced these things are. The outcome was that Mr. Mantides was held to be a contractor, self-employed in respect of one contract, but an employee in respect of the other. And the thing that tipped the latter was that in the second contract, there was a 1 week contractual notice period. And that was enough to tip the balance. One imagines that the balance was actually extremely fine before you get to that question. I wouldn't expect, in general terms, that a 1 week notice period would necessarily be enough to tip the balance, absent something else going on. Kickabout Productions at the bottom is a very interesting one. The first tier tribunal, it was held that, this is from Mr. Paul Hawksby, a radio presenter, and the tribunal held on a split decision with the judge having the casting vote that he was a contractor and not an employee. That was widely thought at the time to be what we euphemistically call an outlying judgment. The facts were that there was no contractual right of substitution, there was a 4-month notice period, and there was a minimum of 222 shows per year on Mr. Hawksby. So it somewhat went against the grain that of the other decisions that he was held to be a contractor. Well, the upper tribunal decision, which has recently come out, has confirmed that that view that this was an outlying decision, and the upper tribunal has now held that actually he should be treated as an employee and not a contractor. So next slide, Alice. Let's draw out what we can from these cases. As I mentioned a minute ago, judges have been criticised at first instance for the variety of outcomes here and the difficulty in finding reasoned, proportionate considerations for those differences in outcomes. And one widely made criticism is that the judges are getting it wrong. The judges aren't being clear, the judges can't decide between themselves. There's too much variation at first instance level, and that therefore it's very difficult for practitioners and business owners to make the right decision. And I think I have an interest here in that I sit part-time as a judge in the tax tribunal. I should make clear I'm not speaking in any sort of judicial capacity today, and you would expect, I think, that I would speak up for my fellow judges, and I'm going to, because I do think that that criticism is unfair. Judges are humans. They bring their own experience and their judgment to bear on all of the cases before them. Judges take deciding the cases incredibly seriously. It really matters to a judge to get the right outcome. All of these cases turn on very nuanced facts, and I think that has to be borne in mind, and really I think that's why we get these different outcomes. And the other factor that's relevant, which won't appear from narratives of the cases, is that the presentation of the facts, and for that matter the legal arguments, can have an enormous effect on the outcome of a case. How the case is presented in court really is very, very important, and where you get a decision and you're saying to yourself, well, I simply don't understand how they got to that, what you have to remember is that it may be that some witness was enormously persuasive on the stand, and or the person presenting the case did so incredibly fluently and attractively and persuaded the judge to their view. And that's a natural part of the justice system we have in this country. On the continent, it's rather different, but we have an adversarial process, and where an advocate presents a case attractively, it has been known to sway a court. So that's what I think is going on there. Stepping back a bit, what do we think are the important facts? As we've said throughout, mutuality of obligation and the right of substitution are almost always absolutely critical. If one or both of those go against the contractor, it's very, very difficult to pull the case back to the other side of the line. If there's a possibility that mutuality or substitution are going to go against you, and certainly those are aspects that it is easier for us to advise on, then it is absolutely critical that there's nothing else in the factual pattern that that worsens the position. Essentially, you need to be very, very clear what the factors on either side of the line are, and be able to weigh them up. The court, as with HMRC, Court of Tribunal, will look for the hypothetical contract. Now, what do we mean by the hypothetical contract? They will start by looking at the written contract, if there is one, and there normally is in these situations. But that isn't enough to begin and end the matter. HMRC and the tribunal will also look at the actual terms of the contract as performed. They won't simply look at the paper trail and say, that's all right then. And if there is no evidence that contradicts the terms of the written contract, then the terms of the written contract will be deemed to be the hypothetical contract. If there are facts which undermine the written agreement, regard will be had to those, and particularly by HMRC. And so now I'm thinking of an inquiry stage. So tax returns are made, HMRC opens inquiries into those tax returns. What do you need to do at that stage to manage the inquiry? In practice, it's very, very difficult. Factual inquiries of this sort involve HMRC wanting to go through in unbelievably granular detail all of the relevant or potentially relevant facts as to how the contract has been carried out. If faced with an inquiry of that sort, I'm afraid I can guarantee that you will find it laborious in the extreme. They're frankly fairly horrible. HMRC has a tendency in these inquiries to spread the gun widely. It wants to look at everything, and it will then decide what it thinks is relevant. It's a serious job of work to try and keep HMRC to only the relevant facts. So if you are faced with an inquiry of that sort, my strong recommendation is that you bring in an expert to assist with that inquiry, to assist with keeping HMRC to what's relevant and to disregard everything else as early as possible. Else I'm afraid our experience, which I know is widely shared, is that these inquiries get very unmanageable very quickly. So next slide, please. Sinead, we're going to look at 5 practical steps to help preparation.
Yep, thank you, James. So we've listed here a couple of steps that some businesses who engage contractors through personal service companies should be thinking about taking if they haven't already. So the first one is that the business should review all existing relationships that they've got with contractors and identify those which involve a personal service company. If you've got any which operate through an agency, then it's particularly important to make sure that you know what the position is. Is there a personal service company involved? It's also worth making a note and cataloguing the date on which each engagement ends, and in particular whether that will be on or after 6th of April 2021, but also whether any payment might be due after the 6th of April 2021. So the second step that we've suggested here is generally consider what the options are. So once you've carried out essentially a risk assessment and have a good idea of what your potential I guess exposure in some ways is to the requirements of IR35, then you need to look at how you're going to deal with it. So some larger and more risk adverse businesses have already stated that they are intending to take on all contractors onto their payroll. So they'll be taxing them as employees, and that's to avoid the need to make a determination in every case. So we've explained the importance of having the status determination statement, and obviously HMRC is quite happy if it results in an outcome in which tax is paid. So with that, as I say, the more risk adverse might want to consider that as an option. Alternatively, other businesses are suggesting that they might not take on contractors because it's now quite an onerous responsibility to have to carry out that status determination test in every case. And you have to weigh up the risks in each case. Could you potentially be losing the option of gaining valuable expertise from contractors if you don't engage with them at all? So another option, if you do already engage with contractors or if you intend to do so going forward, is actually looking at the budget, what the cost implications are going to be, and potentially renegotiating existing terms. And James, I think you might be able to give a bit more insight on that point.
Yeah, I have. This is something that I've been dealing with in practice, and it's quite interesting looking at it for the moment from the perspective of the end user. Commonly, an end user would expect to pay a contractor at a headline rate more than they would pay an employee. And that's because it's essentially grossed up for not having the tax liability on it for lack of employment rights, such as holiday and the like. So on a headline basis, contractors can be more expensive than employees. Now, the issue here is that where you have an existing contractor relationship, which is going to extend after the 6th of April this year, unless the status determination is that the contractor should be continue to be treated as self-employed, the reality is that the end user is going to have, in addition to the contractual consideration that's already been agreed in contract, going to have the tax and NIC's liability as well. And that is often not what the end user intends. So the fundamental question raised by IR35 and off-payroll working generally is we know where we can work out where the legal obligation to deduct the tax should be. That's fine. But the point for all of you as contractors or business owners is, where should the economic burden lie? Do you need to renegotiate existing contract arrangements, certainly as to consideration, as to the pay element of it, to make sure that you haven't just blown your budget by engaging yourself in a tax liability that you hadn't encountered or hadn't counted for, and which isn't intended that you should bear. So it may well be that there needs to be a renegotiation of these contracts, and that may well be something that contractors will be concerned about. I have to say, I've only seen one case where an end user was content not to renegotiate consideration payment. And in that case, it was because the contractor in question was so valuable to the business in question that they didn't want any risk of losing him. And so they've essentially agreed to wear the additional tax and national insurance. That, I have to say, is very unusual. I would expect more commonly for there to be a renegotiation of consideration.
Thank you, James. So the third step that we've suggested here is looking at deciding the process for determining whether IR35 applies. As I've mentioned, it's quite an onerous task. So is that something that you've got the ability and resource to deal with in-house? Is it something you might outsource? Are you happy to rely on CEST? And if so, do have a think about what to do in the instances where the outcome of the CEST tool is that they can't make a determination. The next tip that we've put down here and step that you should be thinking about to prepare is actually establishing processes to put in place. So firstly, for actually issuing the status determination statements, making sure that you've got a process by which you are confident that you've got detailed reasons and evidence to support the decisions that have been made. And secondly, they're also dealing with any determinations which are challenged. So any individuals internally who are tasked with having to deal with that, do make sure they're aware of relevant timeframes and what the potential outcomes and implications are there. Finally, if you're feeling quite prepared and if you've taken those steps, then you are able to start considering issuing status determination statements for existing or upcoming engagements now, and that might help alleviate some of the burden. Alice, could I have the next slide, please? Thank you. So we've covered, hopefully quite swiftly, but we've covered the basics there of IR35, what it is and what the changes are. But I did just want to touch on one other point. So obviously everything that we've discussed so far in relation to IR35 is looking about the employment status of the individual contractors from a tax perspective, and that's so that HMRC can challenge situations where they think that the correct tax isn't being accounted for. However, the factors that we looked at there, the mutuality of obligation, control, all of those things, are also factors which are used to determine employment status for considering an individual's employment rights. So if you make a determination that a contractor may in fact be an employee for tax purposes, you might also want to consider what the implications might be in terms of their employment rights if they were to challenge that. So it doesn't necessarily follow that because someone is deemed to be an employee for tax purposes, they automatically get employment rights. They would have to go through the relevant process to challenge that. So, you know, probably bringing a claim through an employment tribunal. But certainly if they've got a determination which says that for tax purposes they're deemed to be an employee, that might be relevant, particularly because of the detailed reasons that would be included there. So it's absolutely essential to consider the exposure there if you do engage people who might be considered to be employees. And you'll see from the little diagram there that we've got at the bottom that although for tax purposes employment status is split between either self-employed contractors or employees, with regard to employment rights there's actually 3 different types of employment status. So we've got the genuine self-employed contractors who've got the freedom and flexibility and very few, if any, employment rights. And then at the other extreme, we've got the employees who do have, can benefit from employment rights, can bring claims for unfair dismissal, entitled to redundancy, etc. But in the middle there, we've got this definition of a worker. So you might have seen cases, for example, the Uber case that was in the press again last week, where people in the gig economy are challenging what their status is. And again, the reason why we're mentioning that here is because it's the same factors that might apply. So definitely an issue that you should be alive to.
Thanks, Sinead. Next slide, please, Alice. That brings us to the end of our talk, and thank you for being with us. We've gone over slightly what I thought we would have done in terms of time, but I hope it's been a helpful summary. We will send out by email a copy of these slides to everyone who registered for this talk, which I hope will be useful to you as an aide-memoire. Now, happy to deal with questions, and we have a number. So let me start with those. The first is from Ian. Can you confirm scope of IR35 does not cover someone working for us on a self-employed basis as a sole trader, not as a private company? If they're registered as a limit company and invoicing us for services on that basis, does that constitute the definition of a PSC? And Barry asks a similar question. Well, the essence of the IR35 and off-payroll working rules that we've been talking about is the existence of a personal service company. So if there is no such company and someone, a person is directly contracting with you on a self-employed basis, they aren't within these rules. Now, so far so good, but that's not the end of the matter, I'm afraid, because there are parallel rules on contractors working personally as there are for PSCs. In fact, I've just successfully concluded one inquiry which we settled, where that was precisely the situation. There was individuals contracting personally, and HMRC said, no, you should have been treated as employees. In the end, we settled on, HMRC were asking for a ridiculous 6-figure amount, which they thought was due. But actually, after you took into account the VAT and corporation tax repayments, it was a very, very small amount, which it was just easier to pay rather than take that to the tribunal. So we settled. So no PSC outside IR35, but similar rules will apply. Who else do we have? We have Caroline asks, if I've got a test analyst working on a specific project, has beginning and end date, providing specialist skills we don't have internally and we won't need post-project, would this be considered outside IR35? And she says, I believe they wouldn't. The solution would be to hire them as fixed-term contract. Is this correct? Well, we're not going to give definitive in terms advice on contracts we haven't seen, Caroline. What I would say is that on the fact pattern that you propose, I would expect that arrangement to be outside of the scope of the new IR35 rules, and that the contractor in question would be treated for tax purposes as self-employed. That is provided, of course, that there's nothing in either the contractual arrangements or indeed the working practices as they are in real life, which contradicts that. This is an interesting question from anonymous attendee. We're finishing contract on the 31st of March, but payment will not be made until mid-May. What are the implications for this? The implications are unfortunate, I'm afraid. Sinead mentioned that the new rules will apply to all contracts that haven't been completed by the 5th of April this year. And for a contract to be completed, both elements of it in terms of, on the one hand, the work, and on the other hand, the consideration payment have to be made. And whilst one of those is outstanding, the contract isn't complete. So I'm afraid that the result of a payment arising on or after the 6th of April is that the arrangements will be potentially within the scope of the new rules, and the end user will need to carry out the assessment that Sinead and I have described to determine whether tax and national insurance should be withheld. Tim also asks a very good question. He's evidently well, he's a project manager. Tim says, I would prefer not to touch an in-scope IR35 engagement. I'm sure many contractors feel the same. However, if as a contractor you already provide services to an organisation and then accept another engagement with another organisation which is advertised as in-scope, what are the tax implications for you as a contractor when you're clearly providing services to more than one end user? Should you challenge the status of the engagement? For example, in Tim's part of the country, there are many project management opportunities available with public bodies, but all of them are exclusively advertised as being within the scope of IR35. Is it legal to take such a blanket approach, and could this be challenged? Tim, that's an excellent question. There are a number of parts to it. The important one, I think, the really important one for you as a contractor is if you accept one in-scope contract, does that have an impact on other contracts which you might also have? And the answer is no, it shouldn't. The case I mentioned a moment ago, which I settled, the individuals in question had a number of consultancy arrangements, and HMRC accepted all of them but one. But the fact that we settled the one on the basis that they were employed had no effect whatsoever on their self-employed status for each of the other contracts. So I hope that's reassuring. What should you do, however, about in-scope contracts, and should you challenge them? That's a commercial question for you. Is it legal for end users to just blanket advertise posts as being in scope? I would say no, it isn't, because I would say in adopting a blanket approach of that kind, the end user is not carrying out the status determination exercise carefully, having reasonable care to the actual contractual arrangements or facts. Now, in the case of public bodies of the like that Tim mentions, I suspect, or I don't know, but I suspect it's because of a public policy decision that they simply do not want off-payroll workers. Well, they might not, but the law applies equally to those in the public sector as it does to those in the private sector. The government is responsible for the design of this law, and all taxpayers and potential taxpayers are required to carry out their tax returns on a basis of having reasonable care. So no, I don't think a blanket approach of that sort is appropriate. It's also an issue that some of you may well encounter with some of the big international banks, which are taking a similar approach. I think for similar PR reasons, well, in my view, those are bad reasons, But in practice, what should you do about it? Should you challenge your status determination in any relevant case? I can't tell you what to do. That's going to be a question for you. What I would say is, if the reality of your arrangements is that you should be treated as self-employed, then you would stand every chance of overturning it, even if it takes you to go to tribunal to do that. The commercial question for you is, do you want to do that, when essentially that might blot your copybook with that potential source of work? And so you might take the view that so long as it doesn't prejudice your self-employed status elsewhere, you might well see fit to take in-scope engagements, because money coming through the door is money coming through the door, and not challenge it to avoid difficulties with those end users. But that's a very interesting point. Have we got any more that I want to cover? Sinead, this might be one for you, which I confess is quite tricky and I don't know the answer. An anonymous attendee asks, if you're working as an introducing agency, does the large and medium company rule still apply?
Not entirely sure what what the attendee means there by introducing agency, but I mean the large and medium rule applies to the end user, the client. So it's whether the actual business that's engaging the services of the contractor is a medium or large business, and not whether the agency is in the middle. So if you are one of those agencies that could fall within that work supply chain, then the size of that is irrelevant. The size of that agency is irrelevant, and it's the size of the company end user, business end user, that's relevant for assessing whether IR35 may apply.
I agree. And to be clear, the medium and large business rules apply to all end users. Every end user has to assess whether it is medium or large enterprise, in which case it, from 6th of April, will be responsible for dealing with off-payroll working rules, or whether it's a small business, in which case it's exempt from the changes and needs to operate the existing IR35 regime. Ladies and gentlemen, it's 12:15, and I'm conscious we've probably intruded on your time long enough. Thank you for being with us today. We hope you found that helpful. We will circulate the slides by email afterwards, and as you'll see on screen at the moment, those slides do have our contact details. If you have any questions, in particular, if you wish to instruct us, and we'd be delighted to take your instructions, we look forward to hearing from you. But that's all for now. Thank you very much, and we wish you all the best.